but we will get UltraTech Cement's numbers in just a bit, and we'll get in Nigel as well to analyze those numbers for you, and our team will flash those numbers as well. But just to give you a perspective of what the expectation was from UltraTech's numbers this time around, revenue from operations were expected to increase by 15%. The operating profits were expected to go up by 4% and margins to come in at 18.6% versus 20.4%. Looking at the net profit number, looks like it is largely in line with what the street was working with, 1,690 crore rupees there versus a poll of 1,665 crore rupees. That is the number that we have as of now, and that looks like it is largely in line with what the street was working with, a 5% increase on a YoY basis. So that is the initial number that we have. Revenues at 17,737 crore rupees. It is a mild beat, around 300 crore rupees there. So revenue, it is a beat by around 400 crore rupees. Net profit absolutely in line with estimates. And of course, we'll get Nigel in just a bit to tell us what the numbers are looking like. We need, of course, the operational number as well, and what the management says about volume growth and the operational performance in general.
Yeah.
Okay, so Nigel, tell us.
Actually, even I'm still waiting for this EBITDA number that we're looking at. But the expectation is that it should come in at around 3,230 crores odd, and margin should come in at around 18.5%. So we're just waiting actually, I'm not able to open that. For the time being, the top line and the bottom line, both of them are bang in line with what we're working with. Remember, for UltraTech Cement, we'll be tracking two parameters. One is on the realizations and the other one is on the input costs, because we already have the volume numbers with us. So that what's remaining is the realizations as well as the input costs. So we just wait we have that number that's come in there. And the street was sensing that after Dalmia Bharat, maybe there will be a couple of disappointments that come about. And that number, for the time being at least, it appears like it's a miss. It's missed our estimates by close to around 130 basis points odd. And that's why I think the stock, in the last few days, if you look at it, Sonal, the stocks are a little bit weakish, both UltraTech as well as Dalmia Bharat, because the street was sensing that those numbers are weak and the operational performance actually is weak. We have to further check into it and see why exactly the miss has come about. The raw material benefit hasn't really flown through. And also, we'll just keep an eye out on the debt number. So I'll come back with further details. But for the time being, we have Ronald who's joining in. Hi, Ronald. Just to run you through the numbers, the EBITDA margin has come in at around 17.2%. We are working with a number of around 18.5%. The top line as well as the bottom line, though, they are coming bang in line, closer to around 17,350 crores on the top line, and on the bottom line at around 1,650 crores odd. Your first reaction on the stock?
Hi, good morning. So, you have said it right that, top line has been in line with our estimates, while the operating margins we're expecting around 19.4%. So there is a little bit of miss there, while bottom line we had estimated around 18.5% EBITDA margins and 1,500 crore we had estimated net profit, so higher than estimated net profit. So post the Dalmia results, there were concerns that they had not seen a sequential drop in PNF, power and fuel cost, while there also was an increase in freight cost, both YoY and quarter due to increase in rail haulage charges. So that is a bit of a concern, and that we should be also looking at, at the numbers and what kind of outlook do they give, particularly on power and fuel and freight cost going ahead. While Dalmia, we can say that. While Dalmia, on Dalmia, we can say that there was a little bit concern on also market share loss in the eastern region. I think from UltraTech's volume growth, this should not be the case of, market share getting lost for UltraTech.
All right, I think
valuation.
Ronald, just to ask you, what was the EBITDA number you were working with in comparison to our estimates? It's down by close to around 200 crores. It's missed our estimates. What were you working with?
18.4% EBITDA
18.4%. Okay, so it's coming at around 17.2%. That's 100 basis points miss in comparison to your numbers as well.
Right.
Got it. All right. Also, if you could tell us, if you wanted some commentary, I'm just looking at what the management had to say towards the end of the release. What they say is that they're expecting demand across sectors to remain strong, which is highly favorable for its performance, and the higher infra spends ahead of the general elections as well will hold them in good stead. Yeah, go ahead. You make your point.
Yes, so right. Truly said that demand environment is going to be robust during FY24. Most of the companies are anticipating a strong volume growth for this year. The only point here, there are 2-3 concerns which need to be seen. The first is the pricing. What kind of pricing behavior do the companies expect going ahead, especially during onset of monsoons and during Q2. So one is the pricing behavior, and second is, what kind of benefits are getting accrued from lower OPEX per ton. And if we see the valuation, already cement stocks are, because of this strong outlook, they are trading near their average EV to EBITDA multiples, over the last 5 years. So, whenever there is a kind of a miss in earnings, you might see a little bit correction in the stock prices. But this, I think, would be an opportunity to buy, given provided the outlook doesn't change from here on.
Okay, all right, Ronald, thanks a lot for that. So it seems the street is hearing you because these numbers are disappointing, but the stock hasn't fallen apart. It's only 4% away from its 52-week high. We're trying to get further details on that front, but for the time being, the top and bottom line bang in line with what the street was working with. It seems positioning was on the weakish side, that they were bracing for a bit of a miss, and that's why the stock from the low point of the day has seen a bit of a recovery. I'm not sure whether the street was anticipating a bigger miss on the EBITDA performance. But Sonal, those are the numbers that we have for us. As the analyst said, well, he's expecting if there is weakness into the stock, you look to buy the biggest cement company in India. We'll try to come back with further details. The presentation has just been uploaded, so I'll just have a quick look at that.
Okay, absolutely. Thank you so much, Nigel, for taking us through those numbers. So that's UltraTech Cement, and we'll keep analyzing that even more. For now, we'll take your leave on this edition of Midcap Radar. Stay tuned. We'll get you more on the markets and stock-specific action on the other side. Stay tuned for that.